All right, just a few minutes left now until the closing bell. Still with us from the markets desk, Julie Hyman, Dominic Chu, and Adam Johnson. And also a special treat today, joining us from the Chicago Board Options Exchanges, Andrew Keene. He is an independent trader in options on Goldman, Apple, and JP Morgan. And Andrew, we've been talking a lot about options today, talking just now with Dominic about the strangle trade. But you say, really, there's not a lot of action lately. What's going on?
Oh, yeah, the action's been very slow. I feel like a lot of people have taken time off work. I mean, we have earnings coming out, and we see stocks just not moving. I mean, Amazon is the biggest mover. We saw Amazon was down like $17, and it ended up down $1 in the day. Earnings just aren't moving. You know, the volume's very light. We started getting weekly options in Apple, the Spiders, GLD. So now there's expiration basically every Friday, which I think is drying up some of the volume of the front month.
Hey, but Andrew, is it also not just vacation, but it's like, depending on the day, we get some good economic news, some bad economic news, some good earnings news, some bad. I mean, the data just kind of goes back and forth. To me, it just says we're going to be range bound until we have some clarity.
I mean, yeah, I think we're going to be range bound. You know, we see like 1128 maybe on the upside, and then you see this 1040 number on the downside. Everybody talks about range bound, and, you know, we are trading on very, very light volumes. Like you said, you know, earnings have been good, but stocks just aren't moving. You know, like we had consumer confidence yesterday. I thought we'd maybe get a sell-off, but we're just not moving, and I think it's just because the volume's so light.
What do you need to see to pick volume up, or what do you think? I mean, do guys just need to come back from vacation? Do hedge funds need to ramp it up? I mean, is it a problem, a global problem here, or is there something that needs to happen as far as data points in the economy? What is it?
I don't know what it is, just to be honest. The business is very slow right now. I think a lot of people are on vacation, and you look at a day like yesterday, nothing really happened, right? But gold was down like $26. That's a huge move in gold. You know, the euro's been up pretty strong lately. It's just we're not moving that much. And, you know, like you look at today, you know, we're down 8 handles. Yesterday, we sat around unchanged. You know, next week when we get unemployment, maybe we'll get a better indication of where we go. I think we're going to go down from here.
Hey, Andrew, it's Dominic here. Speaking of gold, I mean, what exactly happened? It broke through that 100-day moving average, that medium-term moving average, and all of a sudden it just kind of free fell. What's going to happen here? Do you short it, or do you just buy the weakness here?
I'm pretty flat gold right here. I mean, if I had to take a position, I would get short. But the thing is you know, the gold's against the euro. Euro's like the 6-month high. It's trading around, you know, 130. So, you know, gold was like the safe to quality, and everybody wanted to own gold. You know, it was like how the market was. It went up every single day. It's about time it had a correction. Maybe this is the correction we have. I do not have a position on it right now.
Back over to Andrew Keene, options trader in Chicago, and ask you, Andrew, is it? We're talking about the low volume here. Is it across all asset classes that you see? You mentioned gold, and I know the options you trade are down. Are there certain asset classes where investors are still very active?
No, I think for the most part, all the options that I trade on equities are really slow. You know, volume's really slow. I look at the volatility in individual stocks, and like Apple's the lowest volatility I've seen in like 4 years. Goldman Sachs the same way. But the thing is, it's tough. It's a tough environment to own premium because we're just not moving. You know, Goldman Sachs moves 50 cents a day now. Apple moves a couple bucks, and we're not seeing these big explosive moves. I think a lot of people are staying out of the market. A, because it's summertime, and B, people want to see us go through one of these range-bound things. You know, everybody says how range-bound we are, 1040 to maybe 1125. 1130. I think you'll see, you know, more trading pick up and more customers wanting to play if we go, you know, through 1130 or down under 1040. But I think once we're stuck in this range, everybody's kind of hanging out and seeing what the next thing is. I think unemployment next Friday will be huge.
Hey, let me ask you, you know, I was talking to you earlier today, and I brought Dominic over to my desk and told him what you had told me, and he said, why? And what you said was they have introduced now weekly options. It doesn't make any sense in such a low-volume market that you put new products in, and what's the purpose? What's the point?
You know, the purpose is if people want to play an event, such as Apple. Apple had earnings, you know, and if you want to buy the August, you know, if you want to put position on in August, you have to wait 4 or 5 weeks for the options to expire. Well, now you can put on a 1-week bet, and if you think Apple's going to go up or down. You know, they started doing it in Apple, GLD, SPY, Goldman Sachs. So it's more if you want to play in an event. It's very tough to trade it. For me, as a trader's point of view, the markets are a little bit wider. The volume's very light on them right now. But, you know, they expire every Friday, and then every Thursday, the next week comes out. So sometimes there's, you know, the Friday that expires, the next week, and then August. But it's kind of drying out the volume because there's more choices of what people want to trade.
Pretty soon they'll do high card, low card.
I think they might do dailies pretty soon.
All right, Jules, thanks so much. Hey, we want to bring in another guest that we've got here on set, Scott Redler of T3 Capital. Scott, we've been kind of talking about what's going on here in the market. You've had some good calls when it comes to the market. Specifically, I want to just mention, you said sell Goldman at 190, then buy it back at 138.50. You said that. The price opened at June 13th, has steadily risen from then. Just try to give guys some perspective, but some other good calls you've had as well. Where are we going, though, in the market? And you look at things technically, correct?
Yeah, I'm a technical trader. I also use some common sense when it comes to fundamentals, but we do trade the price action and the patterns. And this year, it's been one of those years where you have to trade the market. Right now, the indices are flat for the year, but we've had 8 5 to 10% moves that all happened within a 2 to 10 day time frame. The last one just happened. We just went from 10.10 to about 11.20 earlier this week. The market's a bit overbought. As a trader, we sold into that 11.15, 11.20 area, and now we're looking to see, can we hold higher? Can we hold above 1095, 1100, which was the downtrend that finally broke last Friday to the upside. So that would be healthy if we could hold this area and work off this overbought nature of the market right now.
So you're telling me we have to wait and see here?
No, what I'm saying is we just had a nice move, and we're looking to see how the market absorbs it.
Hey, let me ask you, you know what, you have timed gold to the upside and done well on it from 770 last April, or late April, this April. What happened yesterday? We saw it in free fall.
Well, technically, gold was a sell early this month when it broke 1225. There was an accelerated uptrend that got violated. So we, as traders, we tend to respect the trends. Okay, you also recall earlier that month, it tried to break above 1250. It tried twice and had a false breakout. So earlier this month, it was showing technical weakness. So we said, put your stops on the GLD for gold, which is 119.77 and 12.25, and that's when we got out of our gold position. It's been a 2.5-year hold, which is very long for traders. Today, though, as a trader, we tested gold a little bit because of the extreme nature of the sell-off, but I do think we're going to see it, play around with that 200-day moving average over the course of the next few weeks, which stands at around 1120 on gold.
Hey, Scott, it's Adam. We only have about 30 seconds. I'm dying to hear your thought on Apple. Every time it gets north of 265, it gets hit. It was down today. This is a range trader. How do you play Apple?
We went long Apple around 252, and we did sell a little bit today into the 265 area. What I'd like to do is see Apple hold above 260, 255. There's a nice range here, okay, from 240 to 270. And as long as we stay in that range, I do think we break above this range. It might have to take a little while, could be a few weeks, but once we get above 270, we will add to our positions for a momentum trade. Looks good.
Hey, Scott, thanks for joining us. Andrew, as well in Chicago, we had to take a quick break.